Well, good morning or good afternoon, everyone, depending on what part of the country you are joining us from. Welcome to our 65th regular webinar in our series that we started right at the beginning of the pandemic to help with pandemic supports. And we're going to touch a little bit on that in today's webinar. But the main focus today is the budget and what it means, your reaction, and also what it means to you. And so I'm joined, Rachel's going to be in the background as well to answer any questions and may pop up, as is Jocelyn, but I'm joined by my very capable colleague, Corinne Pullman, who's in Ottawa. And today I usually join from Vancouver, but I'm actually here in Ottawa today with Corinne in person, which is really nice. A couple of housekeeping notes. Alexa has just put up in the chat function the presentation, but not to worry, we will send you the presentation after the webinar. And the other thing I just wanted to say, Corinne, before we talk about what's going on with tomorrow's webinar, is there's a Q&A and a chat function. So please feel free to, yeah, Jeff, great, get us going. Tell us where you're from in the chat. We've got some regulars here. Also, let us know if you are new to the webinar. I always like to know how many new people are on. We know we've got tons of regulars and we love our regulars. But if you're new, just say new as well, and then we know. Yeah, lots of folks joining from right across Canada, and it's so great. Isn't it great to see that there's this whole big community of small businesses from right across Canada? So Corinne, one of the things I wanted to mention to everyone before we get going, because today's webinar is on the budget, is we have two webinars this week on the budget, and tomorrow's webinar, and we hope we didn't confuse people, because we had put this, we had planned to do this weeks ago and had it out to members because we knew that you'd want to hear what was in the budget and our take on it. But then the finance minister's office reached out and said, we'd like to do a webinar with your members. And so we have organized that for tomorrow, and it's not too late to register for that if you're interested in it. It's 45 minutes, and we'll put a link up on the screen. But one of the things we just wanted to clarify, because we're getting some questions about this, is kind of our nonpartisanship and how does that fit with having the finance minister. And Corinne, I'm going to maybe hand it over to you, and I'll chime in as well on why it's so important to connect you directly to the finance minister and why we're doing this tomorrow.
Yeah, I mean, I think we feel that part of our role as an organization is to connect our members with the people making the decisions. And that's exactly what tomorrow is going to be about, is to make sure that not only is it going to be an opportunity for the minister to provide her thoughts, though we've asked her to keep it very short and brief, so that it could be more about our members asking questions and trying to get feedback from the finance minister on the issues that are of concern to them. Obviously, we do that on a daily basis based on these webinars, based on our surveys, based on many other pieces of information we gather from our members, and try to relate that to the ministers and to their colleagues across government. But there's nothing more effective than having you yourselves being the one ask the questions. I mean, we may be there still to sort of help navigate what those questions are and make sure we can get as many in as possible. But the idea is we need the minister to hear firsthand from our members about what are the issues that are important to them, because that's the best way to influence. So I think, you know, we're doing advocacy, and you're going to help us with that advocacy through these types of webinars tomorrow. And of course, we do these with whoever's in power and not in power. We've certainly done things like this in the past with every other party as well. So it is really just about connecting our members with the people that are making the decisions that affect them.
We've done this with politicians of all stripes, and we've had, you know, whenever we're asked to, you know, put together a roundtable with members, they used to be in person way back pre-pandemic, where, you know, ministers would hear directly. One of the things the new, everyone being more comfortable with platforms like Zoom has done is allowed us to kind of scale this up. And so she asked us, but it is in no way a kind of a partisan commentary on, you know, that we support all their views. We take our positions based on your positions, not based on our survey responses. So really is just a way to connect you to the minister. And we hope if you're interested, you can join. It'll be different from today's webinar. Today is our take on the budget, unvarnished, no holds barred. Tomorrow, obviously, we're hosting the minister and we'll be putting tough questions to her, but it's more of a lobbying meeting. So if you've ever wondered what it feels like to be in a lobbying meeting where it's not exactly that, but it's close, and you're helping us with that advocacy. We did one with her in June, and she was really, I think, took a lot away from that, and it maybe changed her thinking on a few things. So okay, with that out of the way, I'll come back to you in a minute, Corinne, but we're going to get, Corinne's the star of today's show, but I'm going to just run you through what we're doing. So your take on the budget, our take on the budget, and then we're also going to cover the temporary foreign worker program. So not last week, but the week before, there were some changes announced to that. We know many of you are struggling with labor shortages, so we wanted to share the latest on those changes. And then COVID supports are ending. And so there are a couple things we want you to know about that. And of course, we'll get to as many of your questions as we can. And so feel free to put your questions in the Q&A. We like to start with a little humor or try to have something to put a smile on everyone's face. And so, if you forget your mask at the coffee shop, I mean, this is going to look dated, hopefully pretty soon, but we still remember those days. And I think this is how people are feeling post-pandemic, all tuckered out. The cute pet picture. All right. And then we always like to start with a little inspirational quote. So try to be a rainbow in someone's cloud. We're going to try to be there, point out some rainbows in the budget clouds today. There were a few things that we liked, lots to be critical about as well, but a few things we liked, and we'll be sure to point that out for you. Okay, and one more slide from me. So one of the things that you know that we do is we survey you regularly, and we get these survey results in front of politicians. We have a new dashboard we're looking at on the state of small business. So we know that about 42% of you are back to normal sales. Only 35% have no pandemic debt, either because you didn't borrow or you've repaid it all. And only 18% saying you've recovered from the pandemic stress. So this is something that we are sharing with politicians, hearing from many business owners. I was talking to my hairdresser last week, and everything looks really normal on the surface in his business. And yet, the debt, the stress, it's all there. And I would say, his business and many others are still very much in kind of recovering from the storm kind of situation. So that's that. And Corinne, I think I'm going to pull you up again for the next one, because this kind of was one of the survey questions we asked that helped frame our pre-budget asks. And then we'll get into what you heard in the budget.
Yeah, so obviously, what are those issues that are most difficult for you to manage at the moment? And this is really what led a lot of our discussions with government pre-budget as to what we wanted them to do within the budget. Obviously, what's very clear from this chart and continues to be very clear, this is again brand new data that we've just collected in the last few days, is the costs. Keeping up with costs such as gas, inputs, insurance, but also government costs, taxes, premiums, fees, et cetera. And so we really put an emphasis on this budget in our pre-budget meetings with all levels of government, with all government parties and bureaucrats, was that what can you do to not add to these costs that are already skyrocketing for so many businesses? And so if we go to the next slide, you'll see what came out of this particular budget. And our initial reaction to it is that we really felt it was a really missed opportunity to help small business recover from COVID. There was very little in here specific for small businesses. Now, I'm going to point out a few highlights and few things that are going to be, I think, potentially good for some of our members. Nothing that's widespread, but really we were quite disappointed with the fact that it really was an opportunity to do more to help businesses get to that sort of recovery stage and move forward. And that wasn't really what was in the budget. In fact, instead, it was a very big, heavy focus on new spending. So this is a spending in addition to what they've been doing. And that's, obviously in areas like defense and housing and environment and social programs and many more things, some of which, some of our members may support, others may not. but just overall, the spending was quite high given where we are at right now. And also, what does this mean for deficits? So the deficits, of course, for this year are well over 50 billion today, and is going to be for the next coming year. There is a bit of a plan to gradually reduce it, but in the time horizon that they provided in the budget, there's still a deficit of about 8 billion come 25, 26, 27, which is as far as they sort of went out. And so that concerns us that we're still seeing deficits. Of course, every time you have a deficit, that adds to the overall debt. And we worry, of course, what does that mean in terms of choices in the future? And in terms of things in terms of how they're going to pay this all off, both for current and future generations. So that was sort of a bit of the theme of how we responded overall to the budget. And so again, just disappointment in some degrees, but I do want to share that there were a few things that potentially were okay. So if you go to the next slide, there were a couple of good pieces. Probably the most interesting one, and one that I think is going to be very much welcomed by certain of our members, is that they are going to increase what they call the taxable capital limits on the small business tax rate. So right now, you actually, if you're a business that has taxable capital, so you have, machinery, equipment, vehicles, all of which accumulated go to about 10 million up to 15 million, you actually start to lose access to the small business tax rate when that capital is worth at least $10 million, and you completely lose access once that tax capital is worth about $15 million. That's been the case for probably 20, 30 years. It hasn't been changed. So in this budget, they actually announced they're going to increase that upper limit from 15 to 50 million. So you're still going to start losing access at 10, but the actual speed of losing access to the small business tax rate is going to be a lot slower. It's going to take until you hit 50 million in capital before you actually lose complete access to the small business tax rate. So this means for capital intensive firms, so implement dealers, car dealerships, some agriculture type businesses. Please go back this one slide. Thank you. Agriculture businesses, those are the type of businesses that are probably going to benefit from this. Because up until now, they may only make less than $500,000 per year as a business, but because they have this large equipment on their property, are very capital intensive, they were actually still paying a higher corporate tax rate. So for those businesses, I think this is going to be quite welcome news. It's something we've asked for often over the last 10, 15, 20 years, to be honest. So that was something that was announced in this budget, and hopefully there still has to be a legislative change, but this is something that will come for those businesses that may be in that category. The other interesting thing that they did is they introduced something called an employee ownership trust. And these are a sort of a mechanism that's actually in place in places like the US and the UK already, but it's another mechanism that allows a business to potentially sell their business to their employees. Now, you can do that in Canada today, but often those employees have to come up with, obviously, the amount of money that they need to purchase the business through a loan or other means that they may have. This allows you to set up a trust so that they don't necessarily have to pay everything up front, that they can pay it to you over time and eventually start owning the business over time. So I think it's something that could be interesting going forward. We don't have a lot of details on it yet. So I see someone's asking, is it similar to an ESOP? And I have to be honest, and I'm not sure what an ESOP is, but perhaps we can sort of explore that a little bit more detail later on. But the key here is that it will provide another option for businesses that are looking to exit their business that may be of interest to some of you. Again, not set up yet, don't have a lot of details, but that's something that may be coming. Oh, thank you. Employee share ownership plan. Yes, it could be similar to that, but I think it's a more structured way that is similar to what goes on in the United States and the UK.
Yeah, and Corinne, just a couple of things on this one. Shelley is asking if there's a link to find out more about the trust, and we'll be getting more information out as it's available. But this is like a lot of the COVID announcements where they announce the big idea and then they still have to land on some of the details of the process. But Shelley, if you're interested, we worked with a group. Actually, we asked a survey question on this. And worked with another group who was really advocating for this. They asked us if we would survey our members. We said, sure. And then they used that to do a lot of lobbying on this. And so that's another group that we can connect to, because I think the devil is is in the details in terms of how these programs then get designed. The big idea is good, but then landing it in a way that's going to work for small business is a second important piece of this. So I just wanted to add a little more commentary to that, but I don't think there's any more detailed details available unless you know otherwise, Corinne.
No, not at this point. It was just announced in the budget that they were going to go there. And so next that they have to do is actually create the legislation required to put this together. And that's when we're going to get more of the details of how it's actually going to work. So we'll certainly come back with that information once we understand it.
And Peggy is asking another quick one that you can answer quickly, I think, is what do you mean about losing the lower 9% tax rate? So I know Brendan's answering as well, but.
Yeah, so essentially what them losing the lower 9% tax rate, I know it's a bit confusing. So right now, if you have income, corporate income less than 500,000, you only pay 9% corporate income tax. However, for any of your revenue above 500,000, you actually pay a higher corporate tax rate of 15%. So what we're saying is that basically for those businesses that may actually earn less than 500,000 in income, but have taxable capital worth 10 to 15 million, they were no longer able to access that 9% rate. They had to start paying the 15% rate. And so that was the difference. So it's actually a higher tax rate for folks that are no longer able to, who had taxable capital above 10 million on up to 15 million. So that is where some of those companies may now actually have greater access to the 9% rate rather than having to flip to the 15% rate very quickly. The government estimates is going to save Canadian businesses about 600 million a year, over 5 years. So that could be, I think, helpful again. It's very specific to certain types of industries, but it is a big one for those industries. Okay, now we can move to the next slide. A couple more small things that I think could be interesting for some is something called a labor mobility deduction is something the government is going to introduce. And this is really targeted at tradespeople and apprentices. Who are going to be able to deduct up to $4,000 per year on any travel or temporary relocation expenses that they have. So if you have people that you need to move from one location to another location, or you're trying to bring somebody from one location to your location as a tradesperson or apprentice, who actually will have obviously expenses associated with that relocation, they're now going to have a way to deduct some of those costs in order to go do that work. And it's meant to sort of get labor to be a bit more mobile across the country and hopefully help a little bit when it comes to finding tradespeople across the country. So that's an interesting one. The other interesting one is they didn't do anything on this, but they had something called a rollover provisions. So basically, when you're dealing with small business investments, what happens is investors, it's very difficult for them to defer tax on capital gains. And so we want to make sure that those provisions where they actually are able to potentially roll over a company to somebody else. Maybe it's within the family, maybe it's another way. I don't know exactly all the details, but the government is committed to looking at these ideas to make sure that it's actually encouraging small business investment and not discouraging it. So we'll see where that goes. That's an interesting one as well. And another piece of this, the third one that was, again, very small, but something that we thought was worth highlighting is that we've been advocating for a few years now for the government to look at the bank complaints handling system. It had been sort of divvied up into two different categories. There was a lot of differentiation between two different types of bank ombudsmen that were to help customers, clients, both consumers as well as small businesses with any banking issues they may have. It had become very diluted and not as effective. And the government has now announced they are going to sort of centralize this once again, make sure it's independent, and is something that will hopefully include small business and payments related complaints as well. So hopefully that can help bring a bit more transparency and accountability into the bank handling of complaints. So those are some of what we would call maybe the better news. And I guess, Shelley, you were just asking, is the labor mobility only for the trades? Right now, it looks like it's just tradespeople and apprentices. They made a point of saying that in the budget. So and I'm assuming, based on past experience working with the federal government on these type of things, they often define it as red seal trades as well. I don't know that for a fact yet. That could potentially still change. But that is something that, based on my experience, tends to be how they define it at this point in time. But this is good feedback for us to take back to the government and say maybe they need to broaden this out to more types of labor than just tradespeople. So
that's exactly where I was going to go, Corinne. This is exactly the kind of feedback and ideas that we get from you on a regular basis through these webinars, surveys that then help us make suggestions to government.
Yeah. So that's about the extent of the good news. Unfortunately, there wasn't a lot of broad-based measures, as I said, missed opportunity to do more. And unfortunately, there's also some elements that were not so good. So if you flip to the next slide, wanted to make you aware that there are no further COVID-related measures to support small businesses or small business debt for that matter. In this budget, it was completely not a mention really at all. And so what does that mean? Well, it's going to mean that all the remaining pandemic relief programs are going to end on May 7th. And we're going to talk a little bit about that in a few minutes, about what do you need to do? What do you need to know about the ending of these pandemic relief programs? But in addition to that, our biggest issue, which is the cost of doing business, was also very little was done to help reduce those costs that you're facing right now. And that was a big disappointment for us. They are basically going ahead with increases to both EI and CPP in 2023. Those were clearly outlined in the budget. Both those increases are going to go ahead. At the same time, the deficit within the EI system is up to $33 billion, which means increases are likely going to happen for the next few years on the EI side. Also, there was no action on reducing credit card fees, which is unfortunate. They have said that they would do that in a previous budget, as well as in their own election platform, that they would be reducing credit card fees. However, there was no action. There was a reference in the budget that they are continuing to work on this, but nothing new actually happening. Another cost, of course, has been the carbon tax in those provinces where the federal carbon tax applies. So there's no mention of freezing the carbon tax or making it fairer. They do talk a little bit about maybe returning portions of those taxes to very specific types of businesses, but not in a broad-based way. So we're quite concerned. We're not exactly sure what that actually all means. So we're watching that closely. But that's an area we'll continue to advocate for, that we want to make sure that the carbon tax is fair to small businesses, because right now, small businesses pay about 50% of the carbon tax, only get back, or supposed to only get back around 10%. And even that they're not getting right now. So that's something that I think needs to be fixed. And also there was actually not much mention of reducing red tape. There was the odd mention on very specific areas, but nothing more general about government's recognition that they are creating costs on businesses because of the heavy regulatory load that they impose. So that's another area we think needs a bit more scrutiny, and obviously a bit more of a push from us and other organizations to get government to take action on. The other not so good news, which is very specific to, again, one specific sector, but we thought important to add here because it kind of is something that I'm hopeful is not indicative, but right now, Canadian wine has an excise tax exemption completely. That excise tax exemption will end by June 2022, which means that they're going to pay the same excise tax as any wine that is brought into the country. This is actually the result of a World Trade Organization trade dispute that Australia brought forward and Canada lost. So they're actually being forced to eliminate this exemption that had been in place for Canadian wines. So it's a small one, but a significant one for, I think, what is considered, a fairly important industry, and certainly in some parts of Canada. Next slide, we're going to sort of share with you some of your reactions, or the reactions from our members who responded to our survey that went out last Friday. We sort of gave a bit of an overview, just like we did here in the survey, and then asked, how helpful do you think this budget will be for your business? And as you can see here, not very helpful at all. So 3/4 of our members basically told us it was not helpful or not very helpful at all to their business. And it's not surprising given how narrow and limited any of the good news was from a small business perspective. So that's unfortunate. Laura, did you want to add something?
I just wanted to add that Monica had asked, I think, a relevant question as we're getting to the reaction to the budget and your reaction to the budget, which obviously tomorrow there's that opportunity with Minister Freeland, and Monica was asking whether there's an opportunity to ask in advance. Absolutely. Feel free, Monica, to put your questions for Freeland into the chat or the question today, as well as tomorrow. The only thing I would just caution on is that tomorrow's webinar is 45 minutes. And the structure is a bit different. We want to get to as many of your questions as possible, but the structure is just a little bit different, with a few comments from her starting off and some end comments from her. So, and it's a shorter webinar, so we may not get to all of them, but what we've been talking about internally is to make sure she gets all that feedback, is to summarize all of the questions for her and get that to her. So yes, please ask your questions, and it will help us frame our questions as well.
Yeah. You can also send the questions to webinars@cfib.ca. That's another way to get them in, and we'll make sure to add them to the list that we have already been sort of getting from members who are registering for that webinar.
Yeah.
So I just want to, the other slide we wanted to show you on the next slide is also reactions from our members based on what was announced. And this is where we asked for some specific feedback on specific measures that came out of this budget, just to see, do our members like these measures? Now, a lot of these measures were the ones I just talked about. And it does look like from this particular side that our members are fairly supportive of a number of these things. For example, the employee ownership trust seemed to be something that was well received. Also, even some of the housing measures, I suspect, are going to be fairly well received by members that are either in the construction sector or struggling and trying to help employees get housing wherever they might be. The tradespeople apprenticeship thing as well. So you'll see there's a number of these measures that are seen as quite positive. The one that's not seen quite so positive, of course, is delaying plans to balance the budget. So these are, of course, our sort of order papers from you as our members to give feedback to the government around. So this is very helpful for us to kind of understand where we need to push back. And so it's super helpful when you can give us this kind of feedback. But I think based on the previous slide, overall, our members are not very happy with the budget, but there are some pieces of it that I think are seen as helpful.
Yeah, this question was really asking about very specific measures in the budget. I mean, if we were to ask about the overall tax climate or the increases in CFIB-FCEI, obviously those are things that are, we know from other surveys, are a big concern to you. And we will be making those points and have been making those points with ministers, not just the finance minister, but as any minister we can talk to, and also MPs.
Yeah, I do want to point out a couple of things here. One is improving access to the temporary foreign worker program was also well received by almost 2/3. I'm going to talk about that in just a minute and what some of those new initiatives are on the temporary foreign worker program. But also what I'm going to talk about a bit later is the phasing out of COVID-19 business support programs. Again, here almost a little over half of our members are okay with that. So obviously there are different members are experiencing COVID recovery in different ways, and we're aware of that. And so we're certainly trying to make sure that for businesses that are still very much struggling, who may have been hit a lot harder, that there continues to be something that we can do to help. But we also recognize there's many of you that have been able to get back to a more normal place and see that this is now the time is probably right. So it's a big balancing act for us to make sure that we're reflecting both those positions in the work that we do. So moving on to the temporary foreign worker program, which is the next slide. Last week as well, at the beginning of the week, the government also announced changes to the temporary foreign worker program, which are actually quite positive. These are changes that very much reflect the things that we would like to have seen in the temporary foreign worker program. We do know the shortage of labor continues to be a very big issue for many, many, many of our members. I think in our last report, something like 55% are telling us that they have a labor shortage right now and are trying to figure out ways to deal with it. We've also done a lot of work on what tactics business owners are trying to take and how those tactics are working for them. And what we found is that using temporary foreign workers, while not heavily used by our membership, only about 1 in 5 or 1 in 6 have used it. For those that have used it, it's actually been quite effective. Probably the second highest effective rate after people who've been able to use automation to help address some of their labor shortages. So what were the changes that were brought into place to actually potentially make it easier to access the temporary foreign worker program? Well, first and foremost is this idea of this, they've removed something called a refusal to process policy, which means that particular policy actually made it much harder for the businesses in accommodation, food services, and retail trade to access temporary foreign workers, especially when they were in a region that was designated as having a higher than 6% unemployment rate. So what they've done is they've eliminated all of that. So which means that it doesn't matter what the unemployment rate is in the region from which you're applying. You can actually still access temporary foreign workers as long as you've gone through a labor market impact assessment and shown that you've tried to find a Canadian to fill the job and you've not been successful. So that opens things up a little bit more for businesses in those particular sectors. That just comes into effect later this month. The second, I think, really important one is that in 7 sectors, including accommodation and food services, you're going to be allowed to hire up to 30% of your workforce through the temporary foreign worker program for low wage positions for 1 year. So they're opening it up temporarily a bit more for 1 year so that you can have a large proportion of your workforce as low wage temporary foreign workers, which is particularly important in things like accommodations and food services. I believe retail trade might be in there. There are 7 specific sectors that get that. But for everybody else, they're actually allowing businesses now to hire up to 20% of their labor force through the TFW program for low wage positions. And this is actually until further notice. So that seems to be a much more permanent change. And this is an increase in the 10% cap that had been in place since 2014, though some had still been able to use the 20%. It's sort of been back and forth. But that too, I think, will help a little bit for businesses that are really struggling to find Canadians to fill those jobs. Again, effective at the end of the month. Those are the 2 big ones. There's also a few smaller but equally important for certain sectors changes to the temporary foreign worker program on the next slide. And the first is that the labor market impact assessment, which is the assessment you have to get as an employer first in order to be able to get a temporary foreign worker. Those assessments are usually only valid for a few months. It was actually only 6 months prior to the pandemic. It went up to 9 months more recently. They're now doubling that to 18 months. So once you've paid, there's still a complicated process to go through to get it. So that hasn't changed. That's something we're still working on. You still have to pay your $1,000, which is unfortunate, something else we're pushing them to address. However, once you get it, it's valid now for up to 18 months, which can be more helpful in the fact that, sometimes there's a disconnect between getting your LMIA and getting a permit for your temporary foreign worker. And we've seen many occasions where you have your labor market impact assessment, but it's taking Citizenship and Immigration Canada longer to process the work permit. And then when your assessment expires and the work permit comes in, this way you have more time for that sort of connection to happen. So hopefully that will help reduce the duplication. Secondly, there's no longer a limit to the number of low-wage positions that employers and seasonal industries can fill through the TFW program. So that's welcome news for those that may be in the fishing or other types of industries that are more seasonal in nature. Agriculture too, that don't use the seasonal agriculture worker program. They've also lengthened the duration those positions can be in Canada from 180 to 270 days per year. And third, for anybody who's more in the high wage category, they've actually are increasing the number of years that person can be employed within Canada in the high wage and global talent stream from 2 years to 3 years. So again, you can keep people longer if they're considered to be in the high wage category. All of those measures come effect immediately. So it is something that I think can be very positive, but as I pointed out, and I think I saw one comment come in, the application process, unfortunately, is still fairly cumbersome and is something we're going to continue to push governments to work on. And yes, it is very expensive at $1,000 each time. We have been lobbying for that to change for many years, especially if you get rejected. It's quite the slap in the face. You pay your $1,000, they then say, no, you're not eligible. And then you still lose your $1,000. So I think there are a little more work to be done there. And that's something we're going to be focused on going forward.
Yeah, I was going to say, Corinne, this is something we're talking about if we can work it in tomorrow that we may be raising with the finance minister, but also just wanted to make the point that we're aware that it's very difficult, that there's a red tape component of this as well as the cost, but our counselors can also help a little bit on the red tape side. So if you do have questions on the temporary foreign worker program, that's the kind of thing where if you're stuck, feel free to call our helpline. We'll have the number on the screen at the end as well.
Yeah, for sure. So that's the temporary foreign worker program. If you move to the next slide, we're going to move into a bit about the COVID programs winding down. So just to clarify, COVID relief programs, they're actually, this period that we're in right now ends May 7th, and this is going to be the final period for which you can apply for the 3 remaining programs. And those 3 remaining programs are the Tourism and Hospitality Recovery Program, Hardest Hit Business Recovery Program, and the Canada Recovery Hiring Program. I do want to tell you that for the Tourism and Hospitality Recovery Program, you have to have a 40% revenue loss in order to apply. The Hardest Hit Business Recovery Program, you have to have a 50% revenue loss in this period in order to apply. And the Canada Recovery Hiring Program, you only need to have a 10% revenue loss. So I want to reinforce that the Canada Recovery Hiring Program may be something that you could use, because we're finding a lot of people aren't realizing what this program can do. You only need a 10% revenue loss to access it, and you have to have been shown that you've been hiring more staff since over the course of the last basically year. Your reference point is March, April of last year. And if you've hired more staff since then, you still have a 10% revenue loss, you may be in line for a little bit of money to help you with those costs of getting back up and running again. So we thought we had put the link into here, but we may have to access. So we may ask Rachel in the background to add the link in the chat to our Canada Recovery Hiring Program page to get more information. We have just put up a new page on how it works and what it looks like and what you need to do. So if Rachel or Jocelyn or one of the folks working in the background could put that link up on the chat room, I think that could be helpful for some folks that may be interested. Thank you. Thank you, Jocelyn, for doing that. So we feel it's a program that's been underutilized and not well known, but potentially could have some help for those that still really need it in terms of getting back up and running again. So all of these programs, though, I want to reiterate, well, May 7th is the final period for which you're going to be able to apply. You do have up to 180 days after the end of each period to apply for those particular programs. So what does that mean? So for this period that we're in right now, April 10th to May 7th, which is known as period 28, you actually have up until November 3rd of this year to apply. If you don't apply by November 3rd of this year, you will not be able to apply after that point. And this is true for every one of the periods before this as well. You have up to 180 days after that period ends to apply for that particular period for these subsidies, if you are eligible. So what does that mean in terms of right now? So the last period that's still open for applications is the period 21, which ran from September 26th to October 23rd, 2021. And the last day you can apply for that period is April 21st. So just over a week from now. So if you did have a revenue loss during that period, you may be eligible for one of these subsidies. In fact, back then, correct me if I'm wrong, Rachel, that might have even been under the wage subsidy and the rent subsidy still, but I'm not 100% sure. But those per week, just call one of our counselors, and if you think you may still be eligible, we can help you work through which of the programs you could be eligible for. But you do have about a week left to apply for that period. I hope that makes sense, but it's an important thing to understand. So while the period ends May 7th, you do have time to apply for it for the next few months still. Then moving on to the next slide.
Corinne, Laura. We were also going to mention, I think, and maybe it's on this slide. We were editing right up to the last minute on this, but the hiring program that is that coming up?
No, I just talked about it, and Jocelyn put up a link in the chat room.
Excellent, good. Okay, I didn't see it on the slide, and I was answering another question, so thank you.
No. So Jocelyn thankfully put it up.
Yeah, don't leave money on the table with that one, guys.
Yes, exactly.
A message.
Yeah. So the other two programs that I've been, one program's been heavily used. These are the other programs. So CFIB, of course, the Canada Emergency Business Account Loan, it did end last year on June 30th. There had been a few folks that were still going through the process of getting it after June 30th because there may have been an incorrect number put in at one point in time and they had to correct it and so forth. All of that has been closed now. Everything has been shut down. No further adjustments are going to be made to Canada Emergency Business Account Loan. In fact, we have been told they are going to start doing collections of loans for those that are deemed not eligible. And that's going to start very soon. So just a heads up, hopefully everything is worked out for everybody that's on this particular webinar, if you were able to access this particular program, but that is something that may be coming. The other program that was out there for quite a while was the Highly Affected Sector Credit Availability Program. It was a loan program as well, but it had fairly attractive loan terms. It also ended on March 31st. So that one is no longer available either. So it really is the end of all of these programs. So what are we doing? Because we know that there are still businesses out there struggling. We are very much focused, especially on the debt that has been accumulated. We know through our research and your feedback that many of you have pretty hefty amounts of debt that had to happen because of COVID. On average, we have calculated that it's about $160,000 per business right now that is dealing with COVID-related debt. Of course, that fluctuates depending on the sector you're in, how hard you were hit, and so forth. So our big message continues to be, we need governments to help those hard-hit small businesses still, and mostly on the debt relief side. So what can be done? What we're pushing for is still pushing for increasing that forgivable portion of the CEBA loan. So of that $60,000, if you went to the 60, $20,000 is to be forgivable today if you can pay it back by the end of 2023. And I know for some people that may still not be enough time, so we're pushing that to be to the end of 2024. And we're going to push that the forgivable portion go up more, maybe to 50% of the loan or even more. But that is something we're not going to let go of. So we're hoping to continue to do push the government to do something to help with that debt relief, because so many of you I know are still struggling with that. So I think that's where it ends. We go to the next slide. Yes, I'm going to turn it back over to you, Laura.
This might be a good time for me to interject as well. Something we actually just learned yesterday from one of our poor members calling in. So she received the $60,000 CEBA loan and has actually repaid the $40,000 element, but she overpaid. To be careful, she wants to be very diligent, so she made sure she paid just a little bit more. I think she paid just an extra $100 more. And what we've heard back actually from her bank is now that she doesn't have access to that $20,000 forgivable anymore, and they're asking for the full $20,000 back. So be very, very careful about the amount you are repaying to the bank. Obviously, we're looking into this on her behalf right now, but I want to caution everyone. It sounds very silly. You know, you're being penalized for essentially paying more than you had to back. But her bank has chosen essentially to take that next step and say that you no longer get the forgivable portion, you have to pay the rest of it back. So like I say, we're looking into it on behalf of our member right now, but be very, very careful about the amounts that you're repaying because you just never know what your bank's going to do if you operate outside of the agreement you originally had.
I cannot wait to fight her bank on that one.
Oh, yes. We're going toe to toe for sure.
Yeah, no, that's the first that we've heard. So hopefully that's just an anomaly and it's something that we can deal with. But I think it just goes to the fact that make sure you're working with your bank closely when it comes to paying back that loan and that you have an agreement in place of how it's going to work. Because I know depending on the bank you're with, it may be different from bank to bank. So.
Well, and there was another question from earlier that I saw that I think one of the counselors answered, but might be worth putting live here, Corinne, is, you know, what kind of paperwork, like there, you know, when you're paying back, I think the question was, I got some paperwork from the bank saying I paid it back, but I don't have any recognition from government. And so I'm not sure what if anything, we know about that, but these loans are between you and your bank really. So
yeah, I don't think you're going to get anything from government. If the bank is satisfied with the loan being repaid, I think that's enough for the government as well. I don't think you need to worry about the government saying, oh yes, you paid it back, because they will then relay that information to government. So the government knows that it's been paid back and it's off their books too. So I think you're okay. Yeah.
For the first about 25 or 30 of these webinars, one of the recommendations that I made every time was keep a little logbook or a little journal of some of the COVID related decisions you're making given the uncertainty. And again, just keeping a little log of that you've paid back and keeping your records on all of this, obviously important. Just, you know, whatever you're getting from the bank and just making sure you have all of that in order, just in case. Hopefully you won't have a problem, but just in case you do have a problem, you've got that paperwork to fall back on. So we're going to take some more questions, but while, oh, and Jocelyn will pop up in a minute, but I just did want to mention again the upcoming webinar where you can register, and the link will to this deck we'll put again in the chat because I've seen some questions on that, but we'll also email it to you. So if you don't get it in the chat, don't worry, we're emailing it to you. And Jocelyn, you've got something to say.
Yeah, well, Kathy has a question. I believe it's about the enhanced capital cost allowances, where certain classes of assets can be written off from 100% at the beginning of the year. And I was just wondering if you could give an update on that, because I don't think it actually ever kicked in, did it?
No, thanks, Kathy, for that question. We actually get it quite often. So this, just for everybody else's benefit, this was a budget I guess, announcement back in 2021 budget that you're going to be able to write off up to, I think, 1 million or 1.5 million per year in capital assets in the year of purchase to stimulate capital spending. And unfortunately, because of elections and other things that happened in between, the government never introduced legislation on it. So it's our understanding right now that CRA is not allowing people to do that, even though it was in the budget, because it has not been legislated. So we actually, Rachel and I were just having a chat about it this morning. We are actually meeting with CRA officials next week, and that's going to be one of our questions. What happens if a business, because it was supposed to be effective from after the budget last year, but CRA will not process it unless it's been legislated. So we're sort of still trying to get clarity on whether or not you can file the old way and then make a correction later once it has passed legislation, or whether you should wait and hold on to that particular tax measure until the legislation is passed, because we're getting conflicting information between accountants and the government. So hopefully getting more clarity. I have raised it with the minister's office. We are going to raise it with CRA directly. It's one of those issues that we get CRA saying, well, that's finance's decision, and finance saying, well, that's CRA's decision type. And we get this a lot between these two departments, which is unfortunate. But that one is definitely on our radar still, and one that we're still going to push governments to implement quickly. Unfortunately, it just hasn't happened yet. And it's just, we've been told it's because the election delayed what they thought the bill would be for this one. But I don't know why they still haven't done it. So I think that's unfortunate. So we'll be pushing them to continue to move forward with it.
So to our counselors, I'm looking at two comments that maybe we have something to say about. Ed has mentioned that he applied for the tourism hospitality rent subsidy December 19th to January 15th, still hasn't received the amount in the bank account, 3 calls to CRA, and they keep saying it's being processed. Just received dollars for the periods after that. So the question is, well, the specific question is, can we help with that? But the more general thing I wouldn't mind our counselors commenting on, because Sean also has a comment about not receiving 2 periods of rent assistance. And when calling CRA, they can't tell them why. So first question for our counselors is, what are we hearing on the helplines? And second, I know we do help with these kinds of cases. So I don't know if Rachel or Jocelyn or Brendan want to come up and make a comment on this.
Can you hear me?
Yes.
Yeah. Okay. I think I've been having some technical issues on my end. Yeah. Just to echo what Corinne was saying. Yeah. Tread cautiously with the added immediate expensing. From what we've heard from other members, we have heard members filing them as if they were in place, and CRA has said, no, correct this with your accountant. So be aware of that. And then in terms of the COVID programs and having delays, we have had a conversation with CRA where they've actually changed their tone a little bit and said, don't just apply for the tourism and hospitality program, because we're getting a lot of people that we're having to sift through and say they're actually eligible for the hardest hit program. So, and on their end, it seems like they're trying to manage discerning the difference between legitimate rental agreement or not. So that's some of the barriers that they're seeing. But please feel free to send those give our counselors a call when you have those examples, because we're for sure sending them to CRA directly and seeing if we have some contacts to reach out directly and give some sort of update, because you should at least be getting an update in these situations, I think.
But one thing I would flag is it looks like what we're hearing in the chat function is that people have received their period 25, but not 24. Like there seems to be a problem with period 24. So I don't know if that's the first we're hearing about this, but we definitely will look into that issue.
Well, yeah, and we've heard about delays on sort of the rents side, or that you applied for both rent and wage, but the rent was taking longer and the wage was coming through. So there seems to be a bit of weirdness going on at CRA. So I think Rachel, you and I can add this to our list of questions to CRA next week. So this is great information for us to know. So thank you for sharing this, because I think it's important that we be able to get back to CRA with specifics, that we've had a number of members who've received period 25 but not period 24, and why is that? And thank you also, I think, to Rosanna, who talked about how flagged filings are on examiners' desks. And so that could be too, that they're being pulled, but they're not contacting you and they're not telling you why, and they need more information. So there's all kinds of reasons behind this, but it clearly goes back to CRA being much more accountable and transparent about what's going on and what they're doing. So this has been very helpful for us, and we'll certainly try and find out what's going on. But please call us directly, and we can also see how we can help on your individual files.
Yeah. Great. Okay. Well, I'm not seeing any more open questions, but maybe I'll invite my colleagues to, if there's anything that that you want to raise that you saw in the question pile. Looks like we've answered most.
Yeah, I mentioned, thank you. Monica's asking about the email to submit questions. I think Jocelyn, you were gonna, well, I think it was Jocelyn or Rachel that gave me that. So what was it again?
It's just CFIB@CFIB.ca. That comes directly to all the business advisors.
Okay. But if you want to submit questions for tomorrow's webinar, that was a different email address, but we can probably get it either way, right?
That was the webinars at CFIB.ca.
Okay. So webinars at CFIB.ca. If you want to ask a question of the minister for the minister's one tomorrow, if you wanted to come directly to us and ask us questions, or we didn't get to something today, CFIB@CFIB.ca. So.
Great. Excellent. So I think we'll go around and just do a little final, Corinne and Rachel, if you want to make your final comments. And
I was just going to ask Corinne, because I do have Lori in the questions, who was asking a little bit about CPP and EI increases for 2023. Corinne, is that something you can maybe talk about a little bit?
Sure. So in the budget, they did budget for increases in both EI and CPP for next year. My understanding right now is EI is going to go up 5 cents on the employee side, which usually means 7 cents on the employer side. So as you know, it's I think it's at 168. I'm 100% sure, and they go up to 173. That's the employee side, and then the employer pays 1.4 times that. And so there is a limit to how much they're allowed to increase EI every year. And that was something we fought for, so that it's not like a big hit at once. It's a gradual increase over time. So that'll be limited to 5 cents or 7 cents for employers. And on CPP, there is one more year of an increase. Thank you, Ron, 158 to 163. I knew it was an 858 to something, but anyways, thank you. And then on CPP, we do have one more year of a fairly significant rate hike. This is based on the fact that the government many years ago now, 5-6 years ago, decided they wanted to increase CPP benefits. In order to do that, they had to increase the rates, and they've been gradually increasing them. And the increases have been getting bigger and bigger every year. So essentially, that's going to go up also next year. So unfortunately, it's I think around 25 cents again per from the current rate. So as Rachel's pointed out, it's going to go from 5.7% of income to 5.95% of income. That'll be the last premium increase. However, we're going to have 2 more years after that of increases to the maximum pensionable earnings. So if you have staff that are in a bit higher pay categories, you're going to start paying more for their CPP as well after next year. So unfortunately, those are all still in the budget. We're going to push for them to put the freeze on them. We're going to push for them to provide, if they're not going to do that, then there's some other way that they're going to compensate small businesses. Payroll taxes, which EI and CPP are to an employer, are some of the most challenging from a growth perspective. It keeps businesses from making decisions about growing their business. So we want to try to find ways to offset those increases for smaller companies. And that's where our work will be focused.
And that was these have been big lobbying files for you, I know, Corinne.
Yes.
Heavy ones on
everyone's.
Yes, for everyone. Okay, do you have any final comments? And then I think we'll miraculously end on time today, and because I think we've answered all the questions.
Yeah. Again, just thank everybody for joining us. It's I got a lot of good feedback today, which has been great to provide back to governments. Even though the budget is over and we may not have gotten all the things that we had wanted to see in the budget, our work continues on continue to push for those things, because as was reflected today, these things are still really important to you. So they're really important to us. And so our work does not end. It actually continues and ramps up as we go forward. And so thank you again for your input here today, for your input on the surveys, for your input through our counselors, our advisors. So we really appreciate it. And I do hope things are getting better for many of you right now. And if they're not, we're here to listen and we're here to help.
Thanks, Corinne. And we look forward to, many of you are saying we'll see you tomorrow. And so, yes, we'll see you tomorrow. And I just want to re-emphasize again, we're in your corner. We're not in any particular political party's corner. So while we are giving the finance minister an opportunity to connect with you, we are not, that does not mean that we are, we are nonpartisan. That's the easy way to put it, nonpartisan, so that we can best be in your corner. That's the best way we found to be in your corner, is to not be partisan, but to be equally critical and complementary of all political parties, depending on the policies they're putting, like on the policies, you know. So that's where we stand on that. Look forward to seeing you all again soon, and as soon as tomorrow, we hope. And with that, I'll wish you a happy rest of the week, and we will end today's webinar. Thanks, everyone.